I'm coming to you from Jekyll Island, and not far from here, 115 years ago in November of 1910, Senator Aldrich and a group of banking elites came here for a secret meeting to plan for a central bank. We now call that the Federal Reserve, and it wasn't to protect you and me, it was to protect the banking cartel. And in today's episode of PSL, we're going to talk about what it means for you and Old Glory Bank, so stay tuned.
Hey folks, it's your friend John Rich. This is Mike Ring here. We heard too many stories about people getting canceled by their bank.
Does Old Glory Bank have a mission statement? Yes. It's called the Constitution.
The difference is you won't be canceled for who you are, and what you believe.
People need to have an institution that they can trust in.
Well, I like to say that I'm standing between the regulators and America, and I'm the only bank executive who is not intimidated by the regulators.
From DEI, there's PSL, Privacy, Security, Liberty.
That's it.
Privacy, security, liberty.
Today's episode of Privacy, Security, and Liberty is about all three, privacy, security, and liberty. And the reason why is because we are going to talk about the two issues America has to battle: inflation and the bank cartel, which is run by the Federal Reserve. Some of my views that you hear in this episode came from Edward Griffin's great book, The Creature from Jekyll Island. If you have not read his book, you should. Griffin presents a very thorough analysis of the creation of the Federal Reserve and its many bad acts contributing to inflation. He also explains a very credible theory about the connection of the bank cartel and war, and presents evidence of how the bank cartel manipulates governments into military conflicts to then profit from these conflicts. Now, I'm not going to talk about that today, maybe in a different episode of the PSL. For today's episode, it's about how America created this creature, the Federal Reserve, who is the kingpin of the bank cartel, and how, with help from Congress, protects the big banks, not you and me. Let's take it from the top. In 1910, Senator Nelson Aldrich orchestrated a secret meeting on Jekyll Island, Georgia, for him and the banking elite. Now, the purpose of this secret meeting was to draft the blueprint for a central bank for America, modeled after the central banks in Europe. Now, the brainchild of America's central bank was Paul Warburg, a representative of the Rothschild banking dynasty in England and France, and who was the brother of the head of the banking consortium in Germany and the Netherlands. So with Paul Warburg, you had England, France, Germany, and the Netherlands covered. The other attendees had the U.S. banking power covered. In fact, estimates suggest that this group of a mere 6 individuals who attended this meeting on Jekyll Island represented 25% of the entire world's wealth. Obviously, these folks weren't stupid. They knew Americans would never go for another central bank. After the disaster and economic ruins that came from the first central bank in 1791 and the second central bank in 1816, no, they had to use a different term than this time. So they call it the Federal Reserve System. And to confuse the public about this being a monopoly, a cartel, they included a concept of 12 regional banks as part of the Fed system. But don't let the 12 regions confuse you. They all work together as one cartel. So within a mere 3 years of this Jekyll Island meeting in 1910, Congress passed the Federal Reserve Act in 1913 and granted the Federal Reserve the authority to issue currency, regulate banks, and manage monetary policy to control inflation and stabilize the economy. Let me say that again, to control inflation and stabilize the economy. Does anyone think that controlling inflation was really the intent of the central bank like the Federal Reserve? Of course not. The intent of Senator Aldrich and the global banking elite clearly was to protect the big bank cartel, protect their friends in big business, and protect their personal financial interest, all while utilizing our tax dollars and printed money, which comes on the backs of middle America. Again, these folks aren't stupid. They all knew that if they gave the kingpin of the bank cartel, the Federal Reserve, the unchecked power to print money, it's mathematically impossible to control inflation. They didn't care about inflation. They cared about themselves. Everyone knows that, which is why in the 110-year period since the creation of the Federal Reserve, cumulative inflation has been 3,000%. So the Federal Reserve Act to control inflation, in fact, has caused 3,000% inflation in the last 110 years. That means today it would take $3,000 to buy what $100 would have purchased before the Federal Reserve was created. That is the devaluation of money that the Federal Reserve, with help from Congress, as we'll talk about, has cost. $3,000 is only worth $100. No, the elites created the Federal Reserve not to control inflation, but for the power to protect the big banks. What's interesting is that the Federal Reserve Act of 1913 was actually the second bill that was put up following Senator Aldridge's secret meeting on Jekyll Island. Senator Aldridge first put up the Aldridge bill, named after himself, of course, in 1912, but it never made it out of committee and the Senate never acted on it. The reason why is because the bill made two mistakes. First is no one's going to vote for a bill that's called the Aldridge bill. And the second is that it used the term central bank. So after the failure of the Aldridge bill, the 1912 elections occurred, resulting in a victory by Woodrow Wilson, a Democrat. Now remember, Woodrow Wilson should have never have won that election. But the big banks, who wanted a new central banking bill, orchestrated his victory. Let me explain. Teddy Roosevelt, who in my opinion was one of our great presidents, well, he believed in limited terms and voluntarily agreed not to run at the end of his term in 1908, and he instead backed the Secretary of War, William Taft, who easily won. Roosevelt goes off, does a safari, I think in Africa, but after one term out of office, Roosevelt was getting bored, not happy with Taft, so he decided to run as a third-party candidate, which split the Republican vote, resulting in an easy Woodrow Wilson victory. Or at least that's what the history books want you to believe. What actually occurred, and what the history books don't teach you, but which you can easily find if you search it, is that J.P. Morgan was the largest contributor of the Roosevelt campaign in 1912. Number 2 and 3 were big corporations. Trust me, J.P. Morgan was not stupid. He never thought a third-party candidate could win. No, he put up Roosevelt to run and then backed his campaign as the single largest donor because he wanted to split the Republican vote to ensure Wilson won, which he easily did. Thus, the House, Senate, and White House was all Democrats as a result of the 1912 elections. J.P. Morgan and the other elites from Jekyll Island could now fulfill their plan. So within a few months of taking power, the Democrats ran through the Federal Reserve Act of 1913, and they have never looked back. The Federal Reserve Act of 1913 has now been amended numerous times, but here are the three primary functions of the Federal Reserve according to the Act as amended. First, they get to issue Federal Reserve notes as legal tender. Now, remember, the term reserve in the Federal Reserve has nothing to do with an actual reserve, such as gold or bullion backing our currency. It was a facade to get the bill passed. It's just a word. Thus, a Federal Reserve note, or currency, is just fiat, which means U.S. currency that only has value because we say it has value, and the government requires you to take it. Now, this may surprise some folks who know me. I'm not actually offended by this concept. Having fiat that has value, not only because of law, but because we say it has value, is not by itself terrible. Gold only has value because for thousands of years, people says it has value. Now, you could say several thousand years is a long time, so that should count, but crypto has value because we say it does. Beachfront property versus 2 blocks off the beach, although that would be safer from the weather, is more valuable because we say it is. So therefore, my view has always been that the problem with our fiat is not that it's not backed by gold or other precious metals. That's not the problem. Bitcoin isn't backed by gold or other precious metals, and I think everyone would agree that Bitcoin has value. And the reason why Bitcoin has value is because they aren't making any more of it. The problem with our fiat is not because it's not backed by gold. The problem with our fiat is that Congress keeps deficit spending, which requires the Federal Reserve, the culprit, the creature, to create more fiat to keep up with Congress's deficit spending. It's that simple. The reason why inflation exists is because Congress deficit spends. We as a society would be better served, respectfully, spending our political energy on stopping the annual deficit spending by Congress, as opposed to all this talk about backing our currency with gold and eliminating the Federal Reserve. I know that's not a popular position, but it actually makes the most sense. I'll explain more. Yes, I know the theory goes that if our currency was backed by gold, then Congress couldn't deficit spend and the Federal Reserve couldn't print more money. However, history suggests that is not correct. And even in historical periods in which currency of certain governments have been backed by gold, including our own at times, it's always a short-term issue because eventually every government permits reserve shares to allow them to deficit spend. That's a natural law. I'm sorry. It does not matter if our currency is backed by gold. Even if it is, the government is going to overspend. So it's ultimately going to create reserve shares. And therefore, in the end, it becomes not backed by gold, or just a portion of our shares become backed by gold. It's the same result. Gold backing currency is not the problem. That's a form. The substance of the problem is that America needs to quit spending more money than we take in. Everyone says that, but it's actually the real reason. If that occurred, we would have a stable money supply and no more inflation and perpetually increasing money supply. But that's never going to happen, unfortunately. Now, just because Congress is primarily responsible for inflation and the devalue of our currency because they spend more than they take in, that does not mean that the Federal Reserve is an innocent actor. To the contrary, they are the kingpin of the bank cartel and primarily exist to protect the big banks and government, not protect us, Main Street, middle Americans. So return to the three main functions of the Federal Reserve. First, we just talked about its function to print fiat. We just talked about what that meant. And it does not need to be backed by gold to be stable. Just Congress needs to quit spending. Second function of the Federal Reserve is to set interest rates for loans to member banks. This is how the Federal Reserve controls interest rates in America and by extension, the world. So to state the obvious, banks, including Old Glory Bank, and the markets are not required to follow the Federal Reserve interest rates, the Fed funds rate or the overnight rate, whatever you want to call it. Banks and mortgage companies could set any interest they want based on actual market conditions. That would be a concept, but it's not practical. It's not reality. The market and the banks effectively follow the Federal Reserve interest rates because it's impossible to compete against the bank cartel. This is why a mere 12 individuals who serve on the Federal Reserve's Open Market Committee are able to control our entire economy with interest rates. When you say this out loud, it's crazy, and you appreciate the frustration of President Trump and the other presidents that only 12 individuals control interest rates for the world's largest economy. And could you imagine if 12 individuals set the prices of anything else we consume on a daily basis? Now, we consume money on a daily basis, so interest rates matter. But what if they set the price of cars or food or bus tickets or podcasts? That's the problem with the Federal Reserve. Too few people have too much power, respectfully. The third function of the Federal Reserve is to conduct open market operations to influence money supply, which also has an effect on interest rates. This is how they print the fiat we need to finance the $36 trillion in debt that Congress has run up over the last 110 years. Remember, it's the Treasury, not the Federal Reserve, that issues debt to finance the government's deficit spending. However, it's the Federal Reserve, through this function known as the open market operations, that steps in to buy and sell our government debt to ensure there is always a market. They, of course, make up the money they need out of thin air to do these purchases, and that's how they increase the money supply. Think about the absurdity of this concept. One branch of government, Congress, spends more than they make, and the Federal Reserve, which was created by Congress in 1913, ensures that there is always a buyer for their debt. This is why Congress will never get rid of the Federal Reserve. Without the Fed, there is no one to buy the debt they create each year from spending more than they take in. The president and members of Congress will keep bad talking the Federal Reserve, but it's just political talk. They cannot get rid of the Fed because of their addiction to spending, which is how they get votes. While Republicans are clearly at fault for overspending, at least they don't brag about it and generally don't use government money to buy votes. The Democrats openly brag about it and believe the solution to every problem is a spending bill. How do the Democrats want to secure the border? More money, as opposed to just closing the border as President Trump just did. How do the Democrats want to solve health care? More money, as opposed to looking at our food. How do Democrats want to solve crime? More money, as opposed to just locking up criminals. How do Democrats want to improve education? More money, as opposed to holding teachers and schools accountable. If you think about what Democrats brag about, now go Google some Democrats bragging about what they've done in office. They're never bragging about the results of their actions. They only brag about the size of their spending bills. Seriously, find me an example where a Democrat politician brags about the results of anything. They can't do it because they never accomplish anything. Brag about the size of the amount of money they spend at throwing at a problem, never about the problem and how to solve it. So, how's all the spending paid for? Not even the Dems are crazy enough to impose the level of tax net would require to support their spending. No, their deficit spending is paid for by the Federal Reserve purchasing their U.S. Treasury bonds. Put this in perspective, today the Federal Reserve holds about $5 trillion of U.S. Treasury debt out of a total of 36. That means a government agency that Congress created holds 13% of the debt they created. And the big banks, who the Fed protects and helps to fund, hold another 11% of our debt. The Social Security Administration and other U.S. agencies hold another 7%. That means the Bank Cartel, comprising the Federal Reserve and the big banks, plus other government agencies, hold 31% of the U.S. debt that Congress created. Our own government directly and indirectly takes 31 cents of every dollar that we overspend. We're just churning money, and that is how we create money out of nothing. There is no way of getting rid of the Federal Reserve because they are the creature that makes it all happen. Let me say that again. Congress can never get rid of the Federal Reserve because they are the creature that makes their spending work. By the way, when the Federal Reserve creates money out of nothing to buy government debt, they call it quantitative easing. You've heard that, QE. That's the fancy term they use because they know if they told Americans the truth, that they are just merely creating money out of thin air to buy government debt that Congress overspends, Main Street would never put up with it. And that's why we at Main Street have got to start talking about the real issue. Respectfully, it's about Congress and spending. Federal Reserve is just an instrument. And as that instrument, the Federal Reserve does the best they can to protect the big banks and protect Congress. So they use terms that Main Street America doesn't really pay attention to. Here we are at Main Street America, too frequently complaining about our money not being backed by gold. It's a smokescreen. It's a red herring. They want us talking about that because they don't want us talking about the real problem, which is overspending by Congress, which is then facilitated by the Bank Cartel. Thus, that's the real problem. Please, quit talking about how our monetary system needs to go back to the gold standard. It won't work. It's not the problem. The problem is Congress and the Federal Reserve working together to protect each other. Therefore, with all due respect to maybe the 2 or 3 fiscally responsible people we've had in Congress over the last 110 years, Congress, not the Federal Reserve, is primarily responsible for inflation because Congress, not the Federal Reserve, spends money they don't have, and then the Federal Reserve has to come behind them and clean up the mess. They're equally culpable, but Congress is the real problem. So I would ask each of you to put the blame where it really is on Congress. Only Congress can fix this problem. They won't, but only they can. Now, that said, even though Congress is ultimately to blame for inflation and devaluing our currency, 2 things can be true at the same time. Yes, Congress is primarily responsible for inflation, and yes, the Federal Reserve is corrupt because they help Congress do it and work around the clock to protect the big banks, not you. In other words, they protect Wall Street, not Main Street. I'll explain. 3 largest banks that existed before the Federal Reserve still exist today in one form or another, but they still exist because over the prior 110 years, the Federal Reserve has protected them every time they needed it. Citigroup was the largest bank pre-Federal Reserve, which was then called National City Bank of New York, and is now the 3rd largest bank in America. The 2nd and 3rd largest banks pre-Federal Reserve were JP Morgan and Company and First National Bank of Chicago, which now exist as the largest bank in America, JP Morgan Chase. All of the 10 largest banks that existed before the creation of the Federal Reserve still exist and flourish today. Is it their great product and customer service? Or is it because the Federal Reserve protects the big bank cartel? Well, obviously, you know the answer. And here are just a few examples of how the bank cartel takes care of its own. Example number 1. The bank cartel is the real reason why Jimmy Carter had to give the canal to Panama. What, you say? What are you talking about? Well, I'll explain. They wanted to protect Chase, Citi, and Bank of America. And that's it. That's the real reason. In the 70s, these banks made billions and billions of dollars of loans to Panama. In fact, so many billions it's never been publicly reported. Panama was about to default on these loans, costing the bank cartel billions of dollars. No way that was going to happen. So Jimmy Carter, with the consent of 68 senators, 2/3 the Senate has to sign a treaty. And that Senate was led by the powerful Democrat Majority Leader Robert Byrd. You've all heard of him. Not the greatest guy. Agreed to give the canal to Panama. And it worked. Canal revenue quickly doubled after it was given to Panama. So much so today, the Panama makes about $5 billion in revenue from the canal annually. It's an asset they didn't design, build, or pay for, but now they have it. And to no surprise, all of the troubled debt held by the bank cartel prior to Jimmy Carter and those 68 senators giving it to Panama has now been solved. This was the thank you by the Senate to the bank cartel for continuing to buy their pork spending. For context, let me take you back to 1976, right when Jimmy Carter was elected, took office in 77, gave the canal away in 78. So in 76, the national debt was about $600 billion. It's $36 trillion today. And the Federal Reserve held about $100 billion of it. That reflected about 16%. The big banks owned another $120 billion. So back in 1976, the bank cartel held about 36% of the U.S. debt created by Congress. Do you really think the Senate was going to let the bank cartel take a large multi-billion-dollar loss in Panama? Of course not. That's why Democratic president, 52 Democratic senators, even 16 Republican senators approved the Panama Canal deal in 1978 to then pay the debt owed to the bank cartel. Folks, it's that simple. I'm sorry it doesn't align with all the things we've read and been told. It was about the money. It's always about the money. Follow the money. The next example of the bank cartel taking care of their own, of course, it was the 2008 financial crisis. The Federal Reserve bailed out the big bank cartel with their TARP program. You remember that, the Troubled Asset Relief Program? Such a fancy word. And it protected Wall Street, not Main Street. You all remember that racket? Citigroup got $45 billion. Bank of America, $45 billion. Your friends over at JP Morgan Chase, $25 billion they got. Wells Fargo, $25 billion. Goldman Sachs, $10 billion. Morgan Stanley, $10 billion. PNC, $7.68 billion. Now, I want to be honest always and clear. In the end, the money was repaid, and you could say, wow, that's the best loan the government could have made. No, that's the whole point. They bailed out and protected the big banks, but not the small banks. They protected Wall Street, not Main Street. That's the problem with TARP. Yeah, there was one sacrificial lamb. We all remember Lehman Brothers failed, and they deserved it. But that was it. Using the bailout money, every other big bank survived in one form or another. Using the bailout money, Washington Mutual, Bear Stearns, Merrill Lynch, and Wachovia were all bought using government money. But the small banks did not get the bailout money, mostly. In 2008 and the 5 years that followed, 500 small banks and regional banks failed. Only one big bank, Lehman Brothers. There was not a sufficient bailout for the small banks. And here are some of the Main Street banks that failed in 2008 and 2009. Names you've never heard of, but they were real. Hume Bank in Hume, Missouri, 19 million assets, failed. Sanderson Bank in Sanderson, Texas, with 37 million assets, failed. Meriden Bank in Edridge, Illinois, 40 million assets, failed. Valley Capital Bank in Mesa, Arizona, 40 million assets, failed. The Trenton Bank in Reidsville, Georgia, 50 million assets, failed. Main Street Bank in Netherville, Michigan, with 98 million assets, failed. You ever hear of these small banks? You ever even hear of these small towns? Of course not. The bank cartel didn't care about these banks serving middle America, serving you and me. I haven't done the math precisely, but I've looked at enough of these failures and the sizes that I predict that if just 10% of the $500 billion that was provided in TARP would have gone to Main Street, $50 billion, every small bank in America that failed during the 5-year period following 2008 could have been saved. That's not a big idea. 10% of the TARP money, if it had gone to Main Street banks would not have failed, $50 billion. Why didn't the Fed do it? Instead, they only gave 1% of the TARP money, a mere $5 billion, out of the $500 billion. 495 went to the big banks, 5 went to Main Street. That's laughable. Of course we know the reason why that happened. It wasn't because they weren't smart enough to figure it out. I'm not a smart guy and I figured this out. You would have taken 10%, not the measly 1%. By the way, Congress allocated $700 billion. They had $200 billion they didn't even use. They so didn't want to take care of the small Main Street banks. It's because the bank cartel protects their big bank members that serve Wall Street and make political donations and make loans to foreign countries and big business. And they don't protect the small community banks that actually serve America, serve Main Street, middle America, the term I like to use. By the way, during this 5-year period in which 500 banks failed, guess how many new banks were allowed to start? 7. 500 failed, 7 new ones in the 5-year period following the 2008 financial crisis. Folks, it's obvious. The bank cartel doesn't want competition. They hate banks like Old Glory Bank, working for America. For all the talk by Senator Elizabeth Warren and the other senators about not wanting banks that are too big to fail, that's exactly what keeps happening. And it's always going to keep happening because the bank cartel is set up to protect the big banks and stifle the small banks. I'm going to provide one more example of the bank cartel protecting their own and working closely with government. Too closely with government because they want to keep their protection. We all know it. January 2021, the FBI and FinCEN have emails and meetings with various big banks to spy on Americans who may have purchased a firearm or visited the Capitol or liked President Trump or bought a Bible. But if you have not read Jim Jordan's report from March of 2024, just last year, you really need to. It provides copies of actual emails between the big banks, the FBI and FinCEN. And FinCEN is the Financial Crimes Enforcement Network of Treasury. So it's their law enforcement arm. And it's so clear that the big banks voluntarily provided consumer data to the government and searched data fields looking for certain words like MAGA and Bible. Again, if you haven't read that report, please do. So while reasonable minds can differ on the severity of the riots on January 6th, no intellectually honest person should take the view that the spying actions by the bank cartel and government that occurred afterwards was appropriate. So why did the bank cartel risk destroying all customer confidence by voluntarily sharing data with law enforcement? And why did they do that? It's hard to imagine. And I'll tell you why they did it. Money and protection, meaning protection from the government. Government provides money and protection, and the big banks do what they ask. Bank of America, who I always make fun of in Moynihan, are absolutely the worst offenders of providing customer data to the government. And anyone who continues to bank with the bank not for America is doing their country and their fellow Americans a disservice. Now, you don't have to come bank with Old Glory Bank, although you should, but bank with anyone other than Bank of America. You've got to go and see that email between Bank of America and the FBI dated January 15, 2021, where it is clear that Bank of America is gleefully sharing data with the government and looking at their entire customer database to find transactions that showed any debit or credit transaction in DC on January 5th or 6th, including any hotel or Airbnb in the DC area and any firearm purchases, not around that date, but up to 6 months earlier. Think about this. If you bought ammunition in September of 2020 and then went to DC to visit your kid at Georgetown, wholly unrelated to the Capitol riots, your name was given to the FBI. Like, who has this data today? There should not be a list that the government has of people who visited DC on January 5th or 6th who bought firearms or ammunition in the preceding 6 months. By all accounts, Bank of America was the worst offender in this situation. Now you got to ask yourself, why is that? What's so crazy is that in 1904, when Bank of America started, it was actually called Bank of Italy, and it served the Italian immigrants in San Francisco, legal, hardworking immigrants who were denied banking services from other banks. Think about it. Like Old Glory Bank, their founder was very much for middle America and working folk. For example, after the devastating earthquakes of 1906, he set up a temporary bank and started making small loans to residents to help them rebuild the city. So like Old Glory Bank, Bank of America was a great innovator and did the first credit card in 1958, which is now, of course, called Visa. So I am certain that Bank of America's great founder is rolling in his grave as to what has become of his once great bank, and Moynihan is one of the people to blame. Not only because they have denied service to people with whom they disagree, and we all know that. But they shared confidential customer data gleefully with the government, and not, of course, under the threat of subpoena. They wanted to do it. And why did they want to do it? I'm going to tell you. The money. Bank of America got $45 billion of TARP money. Does anyone think that when the FBI or Treasury calls Bank of America and asks them to jump, they aren't going to say, how high? Folks, this is the problem. It's about the money. And by the way, here are the other banks that participated in this voluntary sharing of data based on Jim Jordan's report. I mentioned Bank of America, $45 billion they took during TARP. Wells Fargo, $25 billion. Citibank, $45 billion. Chase, $25 billion. So folks, don't take my word for this. Go look at the actual emails with the FBI and FinCEN with these actual banks involved. By the way, KeyBank, who you know is the bank that circulated the famous search terms, such as Bible, MAGA, Dick's Sporting Goods, Trump, etc. They got $2.5 billion in TARP money. I don't know what more I can tell you about this issue other than don't do business with the bank cartel. If you don't want to do business with Old Glory Bank, as I mentioned, that's fine. But don't give your business with any bank that took money from the federal government. There is a reason why no small bank, no community bank, which is, by the way, where probably most of the people who went to January 6th actually banked with a small community bank. There's a reason why none of those banks participated in that government overreach. It's because they didn't take any money from the federal government. They didn't have to do what the government asked. Again, bank at a community bank. I'd like you to bank at Old Glory Bank because we have the best technology, the best customer service of any community bank out there. And our community is America, not based on geography. But if you don't bank with us, bank with a different community bank. Don't bank with the big banks. So now I'm going to close with a couple questions we frequently get, and I'm going to provide real answers, not only from the perspective of a banker, but a 30-year lawyer. And some of my answers are not going to be politically correct for my side of the aisle. I'm sorry, but I always speak the truth. Question number one we always get: should I buy gold in the anticipation that the U.S. currency is going back to a gold standard, including because of the new capital ratios under Basel III? Folks, if you want to buy gold as part of your asset mix, just like you may want to buy crypto or municipal bonds or real estate or tradable securities in big companies like Tesla or small companies like Old Glory Bank, that is totally fine. But do not buy gold because you think we are going back to a gold standard, which will then cause a rapid rise in gold. This is never going to happen. I explained it earlier. Congress is never going to give up its flexible spending right. And if it goes to the gold standard, they can no longer overspend, and that's never going to happen. So please do not buy gold because you think we're going back to the gold standard. Further, there's way too much confusion out there about Basel III, and I don't know why, because Basel III, you can actually read the actual regulations proposed, and thankfully they've been pulled back for other reasons not related to this. But Basel III, or Basel III, if you're one of the cool kids, only requires the big banks to increase their Tier 1 capital so they have a higher leverage ratio. Today, it's 4%. They're trying to raise it to 6 or 8. Meaning today, the big banks have to keep 4% of their aggregate earnings on their balance sheet. That means 96% can be sent out to dividends to their stockholders. But Basel III would move that 4 up to 6 or 8. Now, I don't think it's actually ever going to get passed, but that's all that's happening. The big banks would merely then have less money to send to their owners. But that increase in the Tier 1 leverage ratio from 4 to 6 or 8 has nothing to do with gold. Like, it's not even talked about. Now, gold is an asset class that goes towards your Tier 1 leverage ratio, but that's always been the case. Basel III has nothing to do with that. So don't confuse that issue to think that banks are going to be required to stockpile gold, which is going to increase the gold price. People are telling you this, but they're lying to you. Please don't fall for this hustle. If you want to buy gold because it's an asset class, great. But don't buy it because you think it will be more valuable because of some change in bank ratios. Please. All right, second question we always get: is the Federal Reserve going to mandate that everyone give up their fiat and take digital currencies as part of a central bank digital currency exchange? As part of that exchange, the government will now track every dollar spent as part of our social credit score. I'm sorry to say this, but this is never going to happen. In my lifetime, or even my kid's lifetime, and my kid's 17, Got one kid 19, one kid 17. Federal Reserve clearly does not have the legal power to do this. The law is clear on this issue. I don't have time to dive deep on this in this podcast. Maybe another one I will. But the law is clear. And if you look at the statutes about coin and currency, the Fed cannot mandate a digital currency. If you're bored, go read the statutes. 31 USC 5103 and 5112 are the two important ones. It's clear, no digital currency. Now, don't take my word for it. Even Chairman Powell, who I assure you is no fan of the freedom economy or Main Street, agrees with this legal position and said so in March of 2021, as reported by the Wall Street Journal. By the way, don't fall for the silliness about the Fed now have something to do with central bank digital currency. The Fed now is just a Federal Reserve competitive version of the ACH. Remember, ACH is not conducted by the Federal Reserve, unlike a wire, which is conducted by Federal Reserve. ACHs are conducted by a nonprofit association called NACHA. FedNow is just a competitor to NACHA. That's all it is. Don't think it has something to do with the central bank digital currency. People are lying to you. Now, granted, could Congress, as opposed to the Federal Reserve, could Congress write a new law to create a central bank digital currency? Of course, Congress has the power to do that, but they'll never do it. There's no way that a bill would get past the House, past 60 senators, and then be signed by the president, even if it was full of Democrats. Even the hard left, who love big government, won't take on this fight and experience the backlash from the public of doing a central bank digital currency. And trust me, don't think that organized crime would ever go for this either. And I'm telling you, yes, organized crime, make political contributions and get involved with policy. So this is never going to happen. In summary, you can quit worrying about a central bank digital currency. The government is not going to make the trillions and trillions of dollars in circulation around the whole world become worthless, and instead you'll get a little token to represent your central bank digital currency. So give up on this one. The third question we always get is about bail-in. This is the view that banks can take their customer deposits to pay their owners and investors. I don't even know how this rumor started. I don't know who's pushing it and why. I understand why gold is always pushed. There's a business of that. I don't know who's pushing this one, but there is no legal position either under the bank regulations or bankruptcy law. And by the way, a charter bank can't even declare bankruptcy, so there's no theory under bankruptcy law about bail-in. But there's no theory that a bank can use customer deposits to protect their investors and their creditors. It's just ridiculous. In fact, the opposite is true. The bank's creditors and investors get burned first. The depositors, the customers, are always protected since the beginning of time. Trust me, I'm saying this, and I have a lot to lose. My wife and I are the largest investors in Old Glory Bank, and it's not even close. We and all of our great founders and investors who are backing Old Glory Bank always stand behind our customers. We serve our customers. We are the last ones to ever get paid. Now, does the Federal Reserve protect the big banks by giving them money and helping them survive and protect Wall Street over Main Street? Of course. But I've talked about that earlier, and that's the whole purpose of the bank cartel. It's corrupt. But that is a totally different issue than this concept of a bail-in about a bank taking its customers' money to protect its investors and their creditors. There is zero legal theory that this can happen. Literally zero. So quit worrying about bail-in. Don't worry about a central bank digital currency. Don't worry about bail-in. Don't believe that we are ever going back to a gold standard. Don't believe that Basel III is going to require banks to buy gold. If you want to buy gold for its inherent value, not because there's going to be a run on gold because banks are going back to it. Please. Well, folks, that's all I got for today. Yes, the Federal Reserve is the kingpin of the bank cartel. Yes, they protect their friends on Wall Street, not Main Street. But until Congress stops spending more than we take in, this is never going to change. So push on Congress to quit spending more than we make. Yes, of course, keep making fun of the Federal Reserve. Yes, of course, 12 individuals should not be setting interest rates. Yes, of course, the Federal Reserve should not be buying so much of our own debt so that Congress is never truly impacted by their spending. But the real problem, I'm sorry, is Congress. Thank you for listening. If you enjoyed this episode, please like and follow. If you don't like it, please let me know why. My email is mikering@oldglorybank.com. Mike Ring, one word, at oldglorybank.com. Also, if you're not a customer of Old Glory Bank, what are you waiting for? Please don't tell me you're a customer of Bank of America. They are the worst. Chase is a close second. Citi third. Bunch of others. Takes just 8 minutes to open an account at oldglorybank.com. And if you like what we were doing, if you like Old Glory Bank, please consider becoming an owner by going to own.oldglorybank.com. God bless and PSL forever.